Welcome to my YouTube channel. Accounts. People find accounting very difficult. Accounting is a skill and requires study. Learning accounting is like learning a language, the language of business. One popular reason for avoiding accounting is fear of maths. People assume accounting requires the use of complex mathematics, which is certainly wrong. I am Prajakta Kulkarni and we will learn account in a very different way. Let us start. Every individual performs some kind of economic activity. A salaried person gets salary and spends to buy necessities and clothing for children's education, construction of house, etc. A sports club formed by individual or a group of individuals, a local authority like a municipal corporation, all are carrying some economic activity. Such activities are performed through transactions and events. Money withdrawn from ATM is a transaction. Expense is a transaction. Profit is an event. Transaction is performance whereas event is the result. We can conclude that event is the result of number of transactions. An individual invests rupees 2 lakh for running a printing business. On 1st January, he purchases goods for rupees 1,25,000 and sells for rupees 1,57,000 during the month of January. He pays shop rent for the month rupees 14,300 and finds that still he has goods worth rupees 15,000 in hand. The individual performs an economic activity. He carries out some transactions and encounters some events. We can see that the individual who runs the stationery business earns a surplus of rupees 32,700. Goods sold 1,57,000, goods in hand 15,000, total 1,72,000. Less goods purchased 1,25,000, shop rent paid 14,300, total of the two is 1,39,300 which we will subtract from 1,72,000 and surplus is 32,700. Earning of surplus rupees 32,700 is an event. Also, having the inventories in hand is another event. While purchase and sale of goods, investment of money and payment of rent are transactions. Similarly, a municipal corporation got government grant rupees 50 lakh for education. It spent rupees 25 lakh for purchasing literacy kits and paid 18 lakhs to the tutors. Is left with the balance of rupees 7 lakhs. These are also transactions and events. So everyone wants to keep record of all transactions and events and to have adequate information about the economic activity to aid the decision making. Accounting has the universal application for recording transactions and events and presenting suitable information to aid the decision making. The aim of accounting is to meet the information needs of the rational and sound decision makers and thus called the language of business. Definition of accounting. Accounting is the art of recording, classifying and summarizing in a significant manner and in terms of money transactions and events which are in part at least of financial character and interpreting the results thereof. The process of accounting starts by identifying the events and transactions which are of financial character and then be recorded in the books of accounts. The accounting cycle begins with source. Source documents can be receipts, copies of checks, copies of invoices, deposit slips, or anything else that prove that a transaction has occurred. A journal is a detailed account that records all financial transactions of a business. A ledger is a book containing accounts in which the classified and summarized information from the journal is posted as debit and credit. Trial balance is the list of all the general ledger accounts contained in the ledger of the business. Adjusting entries are passed and an adjusted trial balance is made post adjustments. All the closing entries are made and finally the financial statements are prepared. Financial statements are profit and loss, balance sheet, cash flow, fund flow statements and notes to accounts. How financial information is generated? These are the steps: recording, classifying, summarizing, analyzing, interpreting, communicating. Recording is the basic function of accounting. All business transactions of financial character are recorded in the books of accounts. Classifying, systematic analysis of recorded data so as to put information in compact and usable form. Summarizing is concerned with the preparation and presentation of the classified data in a manner useful to the internal as well as external users of financial statements. Analysis means methodical classification of data given in the financial statements. Interpreting is the final function of accounting. It is concerned with explaining the meaning and significance of data analyzed. Communicating is concerned with the transmission of summarized, analyzed, and interpreted information to the end users. Users of financial statements. Owner, for evaluating performance of business and profitability of business. Management, for evaluating their own performance, for making decisions, for judging tax liabilities, for estimating expected future outcomes. Government, for calculation of direct tax and for levying excise duty, GST, etc. Customer, for determining general consistency of business. Research analyst, for evaluating trends and for judging investment opportunities in the entity. Employees, for determining reasonableness of wages and salaries, for creating demand for extra bonus. Lenders and creditors, for judging credit worthiness of entity, for judging recoverability of their dues. I hope you found this video useful. Please don't forget to like and hit the subscribe button.